Hello, Matthew Victoria here, Primary Residential. I'm actually chair of the affiliate committee with Monmouth Ocean Regional Realtors, and we happen to have one of our affiliates here who specializes in credit repair. His name's Andrew Smith, and he's with Trinity Credit Repair. So, Andrew, how's it going, buddy?
Going great, man. Blessed to be busy. Blessed to be busy. Thanks for having me on.
So tell us a little bit about what you do.
What do I do?
Yes.
I fix problems, man. That's what I do. No, I've been blessed that for the last 8 years. I've helped a ton of affiliates, lenders, realtors, insurance agents help get their clients' credit scores to the point where they're able to work with them and do business. I'm happy to say I've gotten hundreds of people from I'll say it's very corny, from the fours to the doors. All right, I get people into homes and I fix credit problems. A little bit of education.
Credit is extremely important. As a lender, it's one of the three things that we look at. We look at income, credit, and assets.
Yep.
So people say, why is credit so important for mortgages? Well, it kind of tells us how you are at paying your bills.
Right.
Your credit score is a direct reflection of how you pay your bills. So for us, it dictates what program you're going to have, whether you're eligible for USDA, VA, conventional FHA, and it will also wind up affecting your mortgage interest rate, which is something that is a very hot topic for people.
Right.
So if your credit is really good, they're going to want to give you the better score, the better rate. If your credit is not so good, well, it means you're more of a risk. It's all risk-based. So how exactly is somebody's credit score determined? And when somebody says, oh, Credit Karma told me this, what exactly does that mean?
Okay. Well, first off, it means we didn't do our job to educate them a little bit, but that's okay. We'll touch on Credit Karma in a second. If you want to know how your credit score is generated, it's very simple. There's 5 little pillars, all right? And it's just 5 things. If you master these 5 things, you'll know exactly how to walk properly in life, if that makes sense. We've got your credit history, which is, and I'll make it so simple. That's what we're talking to a 5-year-old. Your credit history is just exactly what it is. Your history of your on-time payments or missing payments or late payments, which we'll get into. In a perfect world, all of your payments that you made them all. Wouldn't that be great? You paid everything on time. If that's the case, it's a ratio of on-time payments versus missed payments, okay? That makes up 35% of your credit score. It's a decent chunk, all right? So we'll touch back on it in a little bit, but first thing first, make sure you made your payments. Great. Second component is your credit utilization. Make it like a 5-year-old would say. All it is what percentage of your available credit right now are you using? You hit it on the head when you said it's about risk, right? So we want to make all these things as riskless. We want to make you look as completely trustworthy as possible. Who's riskier? Someone that has a $1,000 credit card and they have $100 charged on it. They're using it very responsibly. Or somebody that has a $1,000 credit card and they have it charged up to $999.99. Why do you need to lean on that credit card so hard? That's a red flag. You're a riskier person. Your score is going to drop. Matter of fact, ballpark figure, every 10% that you're revolving your credit, meaning letting it go to next month, you're dropping your FICO score down about 10 points. So when I have a client that comes in, we'll pull a credit report and we look and I see a 90% utilization. Ooh. We have a very quick conversation. Like before we even touch on any of these other things, maybe we want to pay off that credit card. All right. And that's going to wind up giving you a massive boost to your score.
Now, is that spread amongst all of their credit cards or is it done on an individual credit card basis?
Okay. The overall utilization is spread over all of your cards overall. So if you have 5 cards and all for $1,000, this one's maxed out and these 3 are empty. We just want the overall number to be under, when you're house hunting, under 10%. You want to be perfect, get under 3%. But like we said, we at least want to see under 10% utilization before I give them back to you to make sure they're in the best possible light. Okay. Those are the first 2. If you just do those 2, get your payments on time and pay off your cards, you've got a pretty decent shot at being able to get an approval. All right. But what do we do more? Let's do more. 15% of your score is based on credit, overall credit types. What types of credit do you have? And it goes back to risk. All right. Who's riskier? All I have is credit cards. All I can show on my report is that I can pay a credit card. Or you. You've shown that you've been successful paying credit cards. You've paid car loans. You've paid a mortgage. You've got some school loans on there. You've shown that you can juggle 4 balls at the same time and handle them all. You are going to have a higher score than I do. because you've shown that you can handle more things. You're less risky. So what we'll do is we try to make sure that, your credit score or credit report, your profile has more of a varied look to it, that you can show that you can handle a lot of different things. Makes you less risky. The next two, age of credit and inquiries. Let's do inquiries. Everybody's so worried about inquiries all the time. Inquiries, every time you go to get credit, you get a little mark on there. All right. Mm-hmm. Who's riskier? Someone that's looking for a lot of credit all the time, or somebody that's pretty content and is doing it, using their points wisely? I tell a story to people. If I walk up to you, we've got a line, there's 10 of us in line. I walk up to the first person. I'm a pretty handsome guy. People like me. I ask you for $10. Would you give it to me? Sure. I go to the second person. Would you give me $10? Yeah, sure. Third person, same question. By the time I get to that ninth person, they're looking at me sideways. They're thinking, what's going on here? Why do you need to borrow so much? That's risky behavior. Well, same thing. Think like the lender. Think like the lender. Keep your inquiries low, and that's going to give you a higher score. Fine. Last thing is age of credit. Kind of hard to work on that one, but age of credit is just exactly what it is. Who's riskier? I've got a 22-year-old daughter that's been driving a car for a couple years now. I'm an old hat. I've been driving for 40. Okay, well, who's more likely to get into an accident? Me, who's gone through 40 winters and knows how to keep a car under control, or my daughter who wants to hit everything in sight? Well, I tend to think the longer you're doing something, the longer you've had your credit successfully, you're going to have a higher score. You're less risky. Those are the 5 pinnacles, the 5 pillars of your credit. If you just think about them and use those goals when you're out living your life, you're going to have a decent score. Pay bills on time. Keep your card balances low. Don't just be stuck in one little box. All right. The reason why age of credit is important. Don't cancel your old cards, because that's lowering your age of credit. When you cancel that card, you just shortened up. Why'd you do it? You hurt yourself. All right. And don't go trying to get every approval on everything. Don't walk into every car dealer now that it's the new year and run your credit left, right, and sideways. You're going to hurt yourself. It's going to keep you from getting a home. But things along those lines, those are the 5 things that make up your credit. All right. And that's the simplest way we can explain it, through horrible stories and things like that.
No, those are good, because a lot of people don't realize when they go car shopping and then they run their credit, they wind up, every lender they send it out to, which could be anywhere between 5 to 10.
Yep.
Every lender, and here's another good question for you. Every lender is going to wind up doing a credit pull, right? Mm-hmm. So what is a credit inquiry worth on somebody's credit score?
Thousands of points. No, I'm kidding. No, typically it's a point or 2 points.
1 million points.
1 million points. One inquiry is not going to kill you. But if you go to, I won't name any names of dealerships, but you go to the dealership, and if your credit may not be top notch, you're going to still get a car. Let's be honest. You'll get a car, but they're going to run your credit through every subprime place possible. I'm going to see every Santander. I'm going to see every Westlake. I'm going to see every single place they sent your credit to. Could be, I've seen 30, 40 inquiries on people trying to get one vehicle. And then they didn't get the vehicle. And then they lost 40 points on their score because of it.
I've always been taught that a credit inquiry is worth 0 to 7 points per inquiry, depending on what your credit looks like. Some people is affected more, some people are affected less. Does that sound about right?
That's fair. I try to keep everything simple for my clients. I tell them 1 or 2 points, don't waste them. Your points are very, very valuable. If I'm talking to them, they're probably borderline credit anyway. I just want to walk them. I keep everything simple. I try to just walk them away from doing things that are harmful, whether it's 2 points, 7 points, whatever it is. Let's not do it until we get you into the house. Get into the house before how many times do I say this? Get into the house before you get into the car. You can always, you can't, what is it? You can drive a car, that's great, but you can't live in it. You could, that's another topic, but get the house before you get the car.
So Credit Karma has a small window of what they look at, because there's over 180 different scoring variations. If they look on their app, say for like Capital One or Discover or Wells Fargo, oh, I got this. Well, they're looking at FICO 8, which is a banking score. Mm-hmm. So what we look at is we look at FICOs 2, 4, and 5, which are mortgage credit scoring methods.
Right.
So there's only 2 places to get it from what I know, which one is me running a credit report. And then if you don't want the hard inquiry, then we can do a soft pull, which doesn't affect your credit score. And then the second place is paying somebody like myfico.com,
MyFICO,
which would wind up giving them their mortgage scores. Is there another place to get it, or am I pretty much
those are the
accurate
two. That's it. If I have a client and we're graduating them and they want an exact number before we send them back to get a hard pull done, we will use MyScore, because that's the only civilian site, I should say, that'll be able to give them that. You know, you're going to give them $35 and they're going to give it to you, and it's fine. And then you know that you're going to go back and, you know, it'll be aces when you see them. Typically, though, what I'll do when we're working with a client, though, the data is the data. Everybody wants to talk bad about Credit Karma. I do the same thing. I tease them all the time because it's an easy mark. But
It serves a purpose for me for what I'm doing.
I mean, it serves a purpose because it keeps credit in front of their mind. I'm not mad at it. If it gets the person in Gen Pop to look at their credit score and give it some advice, or give it some attention, great. I'm happy with that. I want you to know what's on your credit score. Just don't let that credit score get you psyched up. Credit Karma is there to sell you credit cards. That's it. That no one gives you a free report for anything. They're using your data and they want you to click on the milestone card on the bottom, and then that's how Credit Karma gets paid. The data, however, on there is accurate. The scoring model is completely off the hook. The scoring model is Vantage, like you said. Nobody uses Vantage for anything. But the data is okay. You're only getting 2 of your credit bureaus. You're not getting all 3. So, you may have a monster hiding under the bed that you don't know about on your 3rd bureau. That's why it always works out to get a tri-merge from you, or go into a professional. They'll pull all 3 scores so they can accurately look and see what's on your credit report.
So most people like to get things for free.
Sure.
And a lot of times when I talk to people about their credit, they say, oh, I'm just going to go fix it. Now, for me, or to me, I say, well, that's kind of like operating on yourself. If you have a deep gash and you need stitches, are you going to stitch yourself up, or are you going to go to the doctor to actually give the stitches correctly? It's the same thing, because sometimes when people are actually trying to work on their credit, they can actually wind up doing more damage than they could doing good.
I've seen it
So
happen.
why I like working with somebody like you is because you're a surgeon. You know how to do this. So what is it that you do that's different than what they're going to be able to do?
Oh, boy, I don't want to give away all the secret sauce here, man. But I'm going to shock everybody. What do I do that they can't do? Nothing. You can do it 100% yourself if, I'm going to be funny, I ran collection agencies for about 18 years. I've been in the industry a very long time. You don't pay someone to do the job. You pay them to do it well and quickly. I'm pretty sure I could put up some sheetrock if I really, really wanted to. It wouldn't cost me anything. It's going to look terrible. I think you've seen my skills doing that. Can you do credit repair yourself? 100%. You got to know all the laws. You got to not, I'll make you laugh when I say this, you got to not fall for what's on YouTube University. You got to really know how the business actually works, okay? And you have to put your time and your effort into some type of monetary value. I can fix a car. My time's probably a little bit more valuable doing other things. I'm going to pay a mechanic that knows exactly where to go, knows exactly how to cut through the chase and get the results that we want quickly. All right. And also, I'm a professional. I know exactly where to go. I know maybe this is something that you fight. Maybe this is something that we just cut a check and pay this and get you cleared up in 30 days and get you over to get your house. A lot of times people need to know, exactly the quickest and easiest way to do it, so you don't get fighting ghosts, so to speak.
Some of the things that I would say to somebody is that there are laws that govern how collection accounts are sold. Mm-hmm. So they don't know how to go and dig into how the collection account was sold, because that's one of the ways of getting things removed. Mm-hmm. Also, the way that you dispute things has to be done a certain way, because the letters have to become different every time you do it. And there's things that also have to be done on a calendar type of basis. And these are the things, just like people, they go and pay their own collection accounts and they don't even think about asking for a deletion.
All right, there we go. Would you do something if you weren't going to get something out of it? I don't think you would. You're a smart fella. But I'm always blown away by the time that people come in, and I'll see them after the fact, which pains me. And I say, well, yeah, I had a collection here. It was something old. I knew I was getting a house, so I just paid it. Okay, you paid it. You have a receipt for what you did. Yep, I paid him, but it's still showing on my credit report. Okay. Did you ask them to delete it before you paid them? I didn't know that was a thing. All right. This is why you come talk to somebody first. Having a 15-minute consultation.
They're not going to volunteer to do that if you do not ask them.
Don't ask, don't tell. They're not going to do that. So, you may not know, I just paid the balance. You didn't know that you could have gotten some money knocked off for that. Well, no, the balance said this, so I paid it. Okay. You did a great moral thing. You're going straight to heaven. But you probably wasted some money and you may not have got the result that you're looking for in your credit report.
Or it went the opposite way.
Now
My credit score went down after I paid a collection. Well, how old was the collection? Mm-hmm. Well, the collection was 4 years old.
Why'd you do it?
You had 4 years of bad history. So what happens is it's like ripping off a scab. And they don't realize that now that's going to wind up actually having the opposite effect, because it goes back to the skilled person to do what they do. Mm-hmm. Anybody can renovate a kitchen. But as some of us know, a husband wants to do it and it's going to take 6 months. Or if they had a contractor do it, it could take 3 weeks.
Right. You hit on something super. When we'll have a consultation with somebody, one of the things we'll go through, like, all right, we know what a mortgage company needs. We know what needs to come off. We know what doesn't need to come off, what they can work around. Like we say, you don't need to pay everything. You just need to pay the right things. You don't know what the right thing is because you're just looking at the report, but that's fine. When we see what we call, we don't want to wake the sleeping dragon. That's exactly what you're talking about. You had an issue from 4 years ago. Okay, great. Depending on your state, it may be out of statute by now. Fine, great. We don't want to restart it by making a payment and restarting the statute of limitations. Now they can come after you. But that's a different topic. A charge-off account has a report as what it is. All right? Well, right now it's a charge-off account. You're living your life perfectly fine with it being a charge-off account. Well, now when you pay it and you restart that data activity on it, well, now they have to show it on, hey, I paid it, great. Yes, now it's a new paid collection on your report. They have to report it again. You just cut your finger. You just hurt yourself a little bit. Go to someone that knows the rules. Go to someone that knows what your mortgage company needs. Go to somebody that knows where you're trying to get to and let them walk you through the forest. All right, let them guide you. All right, you don't want to wake up the sleeping giant. All right. But if you can get an arrangement where someone's going to delete the account entirely for a smaller amount, why are we arguing? You're going to basically buy your points back. You're going to pay to get what you want. Awesome. That's something when it's going to be deleted and it will not show on your report again and you get your points back. I'm 100% for it. Let's do it. Mm-hmm. Don't pay the random collection that's not going to do anything for you, though. Pretty simple.
Goes back to the surgeon versus the person doing it themselves.
Yeah, exactly. I would be a horrible surgeon. No.
Yes. And it's money well spent, because what people don't understand is that if you can wind up getting collection accounts removed from their credit that they don't have to pay, there's a savings for them right there.
How about that? I'm amazed sometimes when people will pull a report, and a lot of times debts are bought and sold, and that's really just a way to kind of hide the date of last payment for an account. 7 years. For every 7 years, if you have gotten away without having to pay for 7 years, guess what? It's not supposed to be on your credit report anymore. It's a law. Well, when you're buying and selling accounts, well, guess what date goes on the credit report? The date I bought it. So I just, to the untrained eye, oh, well, it looks to me this debt just started in 2022. Okay, well, that's well within statute. That debt can stay there. Well, no, I haven't paid that since 2017. The debt's just been bought and sold. Well, if you don't have someone that's digging into that to find that information out, you're going to wind up accidentally paying something you're not supposed to. All right. All you have to do is, and that's part of the information of what we do when we get an account and we reach out to your creditors. We'll find that out. Come on. That account's too old. Get it off of there. You haven't paid anything for it. Get it off. All right. Now you have an account removed. Your score goes up because we're catching them on the little minutia of what they have on there. So yeah, definitely.
So this video is geared towards realtors and general consumers. So for our realtors out there, if you're having somebody's credit run for an apartment, right? Because they look at credit too for an apartment.
Of course.
And you see that they have some credit challenges. Well, that might be a great time to get them into credit repair. So this way you can get them ready for when they want to go buy a house.
Exactly.
And what people don't understand is that credit is not absolute. A lot of times they're scared to get their report run because of what's in there. And what they don't understand is that credit can be fixed. With a little bit of work and time, credit can be fixed. Time heals all wounds along with actually treating the wound.
Yeah, let's treat the wound. That's the main thing.
People bury their head in the sand because they're too scared. But what they don't understand is that the problem's never going to. The problem actually will become worse because their credit score will keep going down and down and down. So what some people don't know is that our credit for us, what we see on FICO, the top score is an 850
Right.
for mortgages.
Right.
You can get higher, I think, with like cars or things like that. But an 850, right? When I see somebody with a 400 FICO score, they're not buying a house. They need credit fix.
True.
Credit repair. But the nice thing is that they can go from a 400 to a 600 in a 6-month time period with some work.
When I see someone in the fours, and I do, like I said, that's what made my original tagline way back. We'll take you from the fours to the doors. If you're in a 4, it's because the problems you have are so inherently in your face that it's a lot. I'll tell you right now, it's easier to take somebody from the 4s to the 6s than it is to drag someone from the 6s to the 7s. Because if you're in the 6s, you kind of know what you're doing. Your problems are, maybe you have one collection or you just ran your cards up. That's pretty simple. Pay your cards up. Well, my cards might be $20,000. Well, that's kind of a harder problem to fix. That's going to take you some time. The guy that has a 400 credit score, I guarantee, well, look at him. He's 30 days delinquent in something. He's got a couple of old collections that, he forgot about. It's always Verizon or something like that. Those are easier problems to fix, actually, than, I've got to pay $15,000 off. You have a 400 credit score. You probably just have a bunch of small issues and you just don't have the education to get from here to there. That's really what we do. We educate, we negotiate for you. And then a large part of my job is motivating you to do what you got to do now. All right, now we looked at your report. We found where the problem points are. We know that we can get you from here to here. Let's do it. Let's do what you need to do to get the house you want, to remove the pain point. Credit opens doors. The better your credit is, the better access you have to everything. Insurance, you think they don't look at how risky you are? Of course they do. All right? You want to get a mortgage. You want to get an apartment. I'm not going to tell you jobs are looking, but jobs are looking.
Utilities. You're going to wind up having to put a security deposit down because they do soft pulls.
Right. How about that? Yeah. So I can't think of an aspect of life where health. All right, great. You can do a bunch of push-ups. But no, I can't think of another part of your life that credit doesn't impact in some way, shape, or form. I'm biased, but I can tell you what I see and what I know. All right.
So I have a couple of quick tips. We're going to wrap up. I have a couple of quick tips for people from my end that I always tell people when I start working with them. One, set up all of your accounts on auto pay, not through your bank, but actually through the account. If you have a Citibank credit card, set up an auto pay for the monthly minimum payment on auto pay through the actual website itself. Why? What is a missed payment worth? Anywhere between 50 to 100 points?
Yeah. The $30 that you may have a problem with at the bank will definitely be easier to resolve than the 50, 60, 70 points you lose by having a 30-day late. And that's terrible. Late payments are the worst things to try to get rid of. Okay, we can clear up a lot of things. Late payments are definitely a very hard hit.
Just like when somebody's trying to get their credit repaired and they're still late, it's like trying to bail out water from a boat that has holes in it that can't get plugged.
Exactly. When you're trying to work on your report, I'm going to tell you, I try to make a story for everything. We want to work on the C's. The C's. It's 4 C's we work on, and it's in order of importance. First C is you got to be current on everything. Current. Makes sense. I can take away whatever it is in the past, but if you're 30 days late on your car, that takes precedent. All right. We got to make sure you're current. C number 1. C number 2, credit cards. We just talked about it. All right, you're current on everything? Great. Now let's take all that extra money. Let's knock down the credit cards. Third C, collections, not charge-offs. Collections. Let's get those off of your credit report. All right. And the fourth C is collections. All right, we'll look at that last. But taking care of those first 3 gets you definitely in the game. All right. In that order. Current, credit cards, collections. That's how you do it.
So set up your auto pays.
Yep.
Try to keep your balances at below 30% at a minimum.
Below 30% at a minimum. If you're just walking around, 30% is fine. House hunting, we want to see under 10. You want to be top notch. We want to see under 3.
And then get a credit report. Whether you do a soft pull through somebody like me, or you go on myfico.com and you actually get one, you can get your annual credit report, but it doesn't give you a score.
Doesn't give you a score, but it lets you know what's on there. So
And a lot of times people don't even know what's in there. Like when I actually say something to somebody and they say, I never knew that, because they just forget about them. Or what I usually see most of the time is going to be like a Comcast where they never turned in a cable box.
Always.
Right? Gym membership that they wound up canceling and didn't realize that there was still a payment left on it.
Yeah.
You know, and then the last one is going to be medical. I see medical all the time where they wind up maybe having a copay that they didn't pay and didn't know about it, or they had a workman's comp claim, you know, and you could be stubborn as you want and say, you know what, I'm not going to pay that based on principle.
Right.
But just remember something, your principle doesn't get you credit.
That's right. Here's a good thing, though. I don't know how it's really going to go, but one of the last things that the Biden signed was he's removing medical accounts from your credit reports. Well, now let's see what happens come January 20th or what have you, and see if it sticks. But that's a nice lift for some people. I don't think because you have a medical issue in life, I don't think that should harm you from being able to move forward with a home or anything like that. But something that's coming in here, I hope it works.
We actually don't count medical collections as far as anything that needs to be paid.
Nice.
But collectively, we cumulatively look at $2,000 in collections. So that's where the problem comes in.
Gotcha.
But medical is disregarded for us as far as that part of it. But it would be nice to see it not be part of the actual score itself.
That's what I'm saying. I would too, because you see a lot of it, unfortunately. But
So those are my quick tips: is set up auto pay, take a look at your actual report, and make sure that you're current on anything. Do you have any tips that you might want to share?
Call me. No, I'm just kidding. Now, any tips? We pretty much hit on it, man. Make sure you keep your cards, and you just said it, keep your cards low. I don't care how much you spend during the course of the month. When that bill comes, pay it in full, if humanly possible. Pay it in full. If you have several credit cards, here's another tip. I subscribe to the all but one theory. If I tell you how many cards, I've got over 40 credit cards, but I do it because it's for show. It's because of my industry, and I have to walk in and say, look what I have. But for the common person, you might have maybe 3, maybe you have 4 overall total. Great. Have one daily driver, all right? Card that you use all the time, card you get your points on. If you want to use your Amex Gold, get your 5% on this, or great. Or your Cap One, whatever the heck it is. Whatever card it is that's your daily driver, keep that one. That's the one you show your limit on. Everything else, keep it at 0. The bureaus don't like to see a lot of cards with a lot of balances on it. It's just a risky thing. Keep one as your daily driver. Keep the other ones at 0. Okay? Make sure you have some kind of revolving credit. That's 30% of your score. Some people, I don't trust it. I
pay for everything in cash.
Yeah.
Well, unfortunately, credit is a necessary evil.
Right. You need it. So if you're not at a point right now where you can go out and jump in there and get a huge card, keep things simple. You have a bank? Yeah? Go to your bank. Get a secured card through your bank. I don't care how much it is. $200. Who cares? Do the minimum because you're going to have your money tied up there for a little bit. But now when you show it on your credit report, what does your credit report now show? You have credit from a major bank. Ooh, that's a lot better than having a milestone card or something like that, isn't it?
For anybody that doesn't know what a secured card is, it's kind of like a checking account that reports to the credit bureaus. You basically put your deposit into it, and then you spend down from there, but they report your payment history. Because a lot of times people think that, I have a debit card. Debit card is not a credit card or a charge card, because there are differences between a credit card and a charge card.
Right.
But it does not report to the credit bureau, so that's what a secured card does. So it's a useful tool for people.
And since you're saying that, Chime isn't helping you. I see this so many times people use that now as their banking. Oh, it's also helping me on my credit. No, it's not. It's on there. It's giving you something. It shows up on Vantage reports. But the definition of a credit card, a revolving credit card, is it has a limit to it. So how can I judge you on what percentage of your credit you're using if there's no limit? Chime doesn't give you a limit. So it doesn't work in those computations when they're trying to fill the FICO score. A lot of the younger generation is getting these chimes and things like that. It's not helping you the way you think it should. Get a good old-fashioned regular credit card if you can get it. If not, get a good old-fashioned secured card from a regular major bank, you can just walk in and get one, and that's going to help you in more than one way because now you've got a secured card, you've got something reporting, and now you're building a relationship with a bank that maybe you go to down the line, as far as when you need your vehicle or something along those lines.
How about adding utilities to a credit to your credit? Could that help?
You can. There are a lot of sources that do that. There are a lot of sources that add rent to it as well. How it figures into your FICO score may be a little bit less than what it looks like on your Vantage score,
But it could help.
It could help. It gets items on a thin file.
So that's one extra tip that we actually just thought of. You can add your utilities to the credit because I've seen that a lot. So I exclude that from my debt to income ratio because it's not truly a credit card debt.
Right.
So, but it can help boost you a little bit if you need a few points.
Authorized users. I don't know how we've talked this long without doing it. Do not go online and buy trade lines. Don't do that. But if you happen to have mother, father, sister, brother, friend, I always say, that's got decent credit and wants to help get you a foot in the door, being added to an authorized user is a great way of adding age of credit. I've done this for my own daughters. I've had credit a lot longer than they've been alive. I'll add them to my cards, and all of a sudden they get the benefit of all those on-time payments I've made through the years. Great way to boost the credit score or get it jump-started. So
what you want to make sure of is when you're asking for an authorized user to be added on as an authorized user, make sure that it's at least 5 years old, they don't have any lates, and it's not a maxed out card.
of course.
Now, a tip for our parents could be that you can add your child to a credit card that you have and don't give them the card. Now they get credit card usage, right? Or history?
No, I love my daughters to death. If you ever see this video, hi, Dealers, I love you. I will never give them my credit card. No, absolutely.
I said give it to them.
But they do get the benefit of being added on. If you add someone to an authorized user, the card's sent to you, the user. It's not sent to the person you're adding. So you have that little bit of safety. But yeah, it's a great way of helping. Like I said, if it's a card that you've got, like you said, low balance, because all the good's going to transfer, but also all the bad. So you don't want to put any additional weight on this person that you love, that you're trying to help. Low balance, no lates, long usage.
And my last tip that I just thought of, if you co-sign for anything for anybody, remember, you are on the hook for that debt. So follow up to make sure that payments are getting made. I made the mistake of actually co-signing for one of my friends for something.
Okay.
And then I wound up getting an alert 3 months past due when it was due, and it dropped my score by about 100 points. And I even had somebody that co-signed a mortgage for her parents, and when she came to buy a house, she didn't realize that they were in foreclosure. So their debt is your debt. So if you do co-sign for something for somebody, stay on top of it and make sure that it's being paid.
Right. Many, many years ago, as I said, I've done collections for about 18 years in my previous life. Many a car had to come back. So we have conversation with people. I was just a co-signer on this. I shouldn't be hurt. The co-signer's more important than the maker is. Because think about it. If the maker's credit was great, or without you, that car wouldn't have left the lot, would it? That house would have been in somebody else's name. That loan never would have happened.
You're assuming responsibility for that debt.
Exactly. So you definitely, if you want to protect your own credit, you definitely have to stay on top of it. So yeah, 100%. Great words.
So those are some of my tips, what I see. So credit can be fixed. Don't be scared of it. You have to take the bull by the horns, do the things that need to get done, work with the right people, because it can be fixed. So if you don't know where your credit is, you should.
100%.
Because it's one of the most important things in the world. Because if you want to go buy something, you're going to need credit. You want to buy a house, you want to buy a car, you want to get car insurance. All of those things are important, especially if you want to go and buy an appliance and you want to go and get that. That's another one too, is the people that go and get the 0% promotions, and then next thing you know, now they can't buy their house because they didn't realize that it was going to wind up, showing up, because we see those things.
I'm working on somebody with that right now. Do not fall for Raymore and Flanagan with the 1 year. The second you're over that 1 year, all of that interest is going to hit your account, and then you're going to be sad. So yeah.
They count on that.
I know they do. I guarantee they do. They know people are going to walk past it, but either. As we said, credit, necessary. Just know the rules. Let credit open up all the doors that it can for you. All right.
If you're going to buy a house, you need a plan. Even if it's going to be 12 months from now. part of the plan is looking at the credit because that may need to get done. A lot of people think that buying a house is buying like a car. They just walk in and then they get it.
Right.
And then they find out like, oh, my credit isn't so great. So now I can't buy my house. Be proactive. Get your plan. Get your credit report ran. Work with somebody like Drew who can actually help to fix it because it's money that's well spent. Now, you're not going to drag them out either like some of these other people where they have to be in your program for 12 months because you want to collect extra money. Some people do that.
That's true. And that's kind of one of the reasons why I got into doing it myself for clients. I'm not going to knock anyone else's business plan, but sending out a bunch of letters over, we're going to just letter these out. I'm going to charge you $200 a month to send out a bunch of letters. When I was on the other side of the fence as the collection or the bad guy, those letters went right into the trash can. Not proud to say it, but I'm telling you how life really works. When it's a situation where you have a problem, this is just me, face and resolve the problem. You're going to be able to get your result that you want far, far quicker. If the problem is you owe someone some money, let's address it. If there's a way of being able to resolve it quickly and much cheaper, do that. Take 30 to 45 days, bite the bullet, take care of what you need to take care of, go buy your home. Versus taking 6 to 8 months, spending hundreds of dollars every month in the hopes that someone's going to send a magic letter out to make it go away. What seems to make more sense? It's sad. I've seen a lot of cases. People have spent money on magic letters where they could have just used that money and resolved the account and been done months before. All right. Sometimes I'm the guy that has to bring the bad news. Gladly do it. But I'm going to get you from point A to point B as quickly as possible. All right. I have a ton of affiliates. I've got a ton of lenders, realtors that work with me because we turn accounts around quick. That's it. We get you in, we tell you what needs to be done, do it, and go buy your home.
And there you go. So hopefully we shed some light on credit repair and also some of the myths about credit and some of the things that you can do to be proactive and actually keep yourself in a better position. So my name is Matthew Victoria. I'm with Primary Residential, the chair of the affiliates here. And Drew, why don't you tell us how people can get in contact with you, sir?
Very simple. Drew Smith, owner of Trinity Solutions USA in scenic Trenton, New Jersey. I'm online, I guess, Drew FICO Pro on Instagram. I'm on Facebook as well. I'm easily found. I'll give my number as well. It's 609-422-0976. It goes to this phone right here. That's my personal number for everyone that's in this group.
Awesome. Great information. Thank you, Joe.
Thank you, man. Appreciate you having me.
Awesome.